All right, Stacey, we got a bunch of stats from our All-American survey I want to bounce off you. But first, I want to ask, because I was personally in a store yesterday picking up a last-minute gift. What companies benefit from the last-minute urge to shop, or people trying to just fulfill their wish list or their stocking stuffers? Which companies really see that last-minute boost?
That's a great question. And it is at the last minute, everybody's in a panic. And what can I get that's small, that's maybe not a huge ticket item? So that's Ulta. That's a TJX. That's, of course, Home Goods if you have last minute things to spruce up your house and you have guests coming over. And of course, that's Walmart, because all the last minute items that you need to feed all the guests coming over. So those are kind of the impulse pickups. And, again, of course, for women, teens, that extra lipstick or whatever it is from Ulta.
All right, I'm going to use a word that we use a lot here, bifurcation, because we're seeing a bifurcation between what we're hearing from the NRF, trillion-dollar holiday shopping season, and what we're seeing from surveys. I just want to bounce this off you. 60% of people say they're going to spend less on others. 46% of people say they're going to spend less on themselves. You can see the other stats here. Basically, people keep saying they're going to spend less. So then how is the estimate going up when the sentiment is this bad? And who benefits from this bad sentiment but apparent willingness to keep on spending?
And Frank, it's so interesting. So the consumer is always saying, oh, they're cautious. Every CEO we've heard from that reported Q3 earnings, the consumer is cautious. There's a bifurcation, yet the consumer's out there and they're spending on full price, because what we know is that there are fewer discounts out there. Certainly retailers are holding back on discounts and increasing prices as tariffs really, the impact starts rolling in. Don't forget Q1 of next year, that's when the cost of goods increase is really going to hit us. So certainly you hear the consumer's cautious, but what we've seen is there's a lot of full price selling. So that's across the board. You've seen a nice rebound in Urban Outfitters. Hollister comps are up heavy double digits. There's so many retailers out there that are reporting that their margins are incredibly strong despite all the noise we hear.
Yeah, you hear cautious a lot. Also, I think some CEOs got a thesaurus. You also hear choiceful. I don't know where that one came from.
Yeah, right. Exactly. We love those buzzwords.
All right, I want to get to a stock that you're actually bullish on. I think a lot of people are out on, but you're bullish on Nike. You just upgraded it to buy. You had it to sell for a couple years, I think.
Yes.
What are you seeing? Because that report didn't get a lot of other people excited. Weakness in China, a lot of questions about competition from Hoka and On brands. What are you seeing in this companies? Is it tied to the holiday season, or is there some other narrative?
So I think what's really going on is that we had this time period several years where Nike was discounting more, and certainly their margins were under pressure. It degraded their brand, and it was the onslaught, right, of all those brands you just talked about. 3 to 6 months is all of a sudden apparel. They're really pulling back on discounts, so margin accretive there. And the brand is starting to creep back in and compete again. It is going to take some time. And certainly in the Q3 print that we saw, China was a train wreck. And that's really the issue. North America was a bit better. So I think there's a nice glide path here on the margin side. And once we clean up the China market.
You know, I think a lot of people say you have a lot of holiday cheer. Stacey, looking at this company, it's about 30% off of its 52-week high. So it's certainly down quite a bit. All right, last question for you. What's the real story on discounting? Are we seeing discounting comparable to last year, less or more? And what does that say about the strength of retailers and also their inventory holdings going into the new year?
So we cover 60 companies, and we look at European discounts as well as U.S. discounts. And I can tell you overwhelmingly that discounts are flat to down. They're not only the headline promotions are down, that 50% off versus up to 50% off, all that has changed for the better. And in addition, we're seeing the percentage of inventory that we look at on sale and on clearance, that percentage is also down year over year. We're also seeing coming out of Q3, the majority of retailers and brands had very lean inventory. They've been holding things very tight. And also they've been running through inventory that they ordered really early pre-tariffs. So that looks good going into Q1. However, once the replenishment comes in, when the tariffs really hit in Q1 and Q2, that inventory is going to be more expensive. So we're exiting the year clean. And also, obviously, this signals that the consumer is willing to pay full price when there's something out there they want. Otherwise, these retailers would be hitting those promotional buttons. We would see more of that.